If you're living in Loudoun County, Virginia, maybe Leesburg or Ashburn or Sterling, this is your local real estate market review for May 2023. There's so much negative press right now about the dangers of the real estate market, about how there's crashes, foreclosures, a lot of negative press, and I get it. Negative press sells. So obviously, newspapers sell way more and get more clicks to their websites and so forth when there's negative headlines. And there's a couple right now I want to talk about. Like I said, I want to try to dispel some of the common myths. The big one, I think, is foreclosures. And this is a headline that I see quite a bit these days regarding U.S. foreclosure rates. More Americans are losing their homes as foreclosures on U.S. properties rise. Scrolling down a little bit, the article reads, the real estate data analytics firm Adam reports that U.S. foreclosures filings jumped 22%. Now, on the outside, that sounds really scary, right? A 22% increase in foreclosure filings. You're wondering what in the world is going on. But let's just put this in context. Let's zoom out a little bit. Let's look at a chart. And here I pull it up right now, going back to 2005. And as you can see, this is filings each year since 2005. This chart doesn't look that scary, does it? Right? Like in context, historically speaking, going back to the great financial crisis, look at 2010, 2011. Those numbers were really high. Far right side of that chart, we see what's going on right now. Are foreclosure filings increasing? Yes, they are. They are actually increasing 22% over the past year. What that makes sense to me. Why? Because where were we last year? We're in a pandemic. And during that pandemic, if you had a government-sponsored loan like Fannie Mae or Freddie Mac, there was a mortgage forbearance, a moratorium on all foreclosures. So the foreclosure rate went down significantly. Now we're out of that. What do we expect foreclosures to do now that we're out of it? Of course they're going to increase. So 22% increase from last year makes perfect sense. But in the context of the big picture, what's going on, 22% doesn't scare me. And looking at historically over the past 10 years, this number is nothing to worry about. The second issue I see all the time, I think it's a negative press, I think, that deserves a little bit more attention. And that is this feeling that we're about to enter a crash, or the market is crashing as we speak, and that half of the residential areas in the country are experiencing crashes. The important thing is what's going on locally. And so let's look at the local numbers here in Loudoun County. And this is for the past 5 years. It doesn't look to me like market is crashing at all. It looks like numbers are staying pretty stable as far as the medium and the average price point here in Loudoun County. Granted, a little bit of a dip this May, but still the values are at historical levels. So in my opinion, when I'm looking at the data right now, I see a strong market. I see demand keeping up, actually outweighing the supply. The supply is by far the lowest we've seen probably in 15 years. And that's driving a lot of the price points to maintain high, well above what we would ever expected when we saw a little bit of a correction last summer in the fall. Remember last summer, that's when the interest rates went from below 3 up to 6, and that scared a lot of people out of the market. A lot of buyers came back in the market in January. I actually recorded a few videos about that. And since January, the market has remained actually really strong since then. The one thing that I do worry about right now, and that is the debt ceiling. If Congress and the president don't come to some kind of agreement to handle this, and we, for some reason, God help us, if we default on our debt here as a country, that would be just a disaster for the housing market. It would be quick, it'd be painful, it'd be really ugly for all homeowners, basically grinding the market to a stop. I do not see that happen. I don't see how it could happen, but there's a chance. You're seeing a little bit of the fear of that right now in the interest rates, right? Like last week we had rates for a 30-year fixed. We're in the 6.25 range. Right now they're creeping above 7. We're now back in the above 7 range, which I think is a little bit of a threshold. I really start seeing buyers be hesitant about putting offers on the market once interest rates get above 7. Last week or before that, when rates were in the low 6s, and we're actually talking about getting down into the 5s because we had some really good inflation numbers. But because of that debt ceiling and the worries of the debt ceiling, we're back in a situation where there could be some downside to the market. So overall, I'm optimistic with the housing market. I wanted to spend a few minutes to dispel some of those myths about foreclosures and about the market crashing. That's not the case. One thing to worry about, like I said, and it's the debt ceiling. We should have some final numbers or some final resolution about that, hopefully in the next couple weeks. As always, if you have any questions, glad to chat. Give me a call anytime.